You are listening to chartingwealth.com for Wednesday, the 28th of June, 2017. We see the S&P 500 down for the day 0.79%, the big downer. The Qs, the NASDAQ 100 down 1.81%, almost 2% for the day. We also see 20-year bonds down 1.06%. Gold, the only bright spot, up 0.38%. Let's jump first into the S&P 500. Looking at our weekly chart, we see a spinning top. Now remember, we saw it barely eke over going down back on the week ending the 23rd of June. That was this last Friday. We had that preceded a few days before by the two-day chart rolling over. And as we zoom into that two-day chart, we can see that occurred on Tuesday the 20th, and the market's really been sliding sideways since sometime in early June around the 6th, and it's finally started to really move over and accelerate down. Now we had our weekly chart going down and our two-day chart going down. We're waiting for that 4-hour chart to pull back, which it has not done. It just sort of rolled over, which again makes it difficult to get in at a good time. What we prefer to have happen, and again, your 2-hour chart is also permissible to look at. We have folks that like to use that instead of the 4. The 2-hour chart did pull back and did cross over at 10 a.m. on Tuesday morning, going down. Now, of course, you wouldn't enter at 10 a.m. because it's still idiot hour. You could have looked and entered on that 12 noon candle, jumped in at that point going down. But again, we had a move over to really significant down moves. It looks like perhaps the market has peaked. But again, we have everything moving in the right direction. The 4-hour chart, it did not do its typical pullback, which we like to see, and we would prefer to have that happen before jumping in. But again, you can always use other methods, or you can just wait. There will be a pullback at some point, a retracement, and a crossover going down. That's the way we like to play it, and we prefer to do so. That's why some of you use the 2-hour chart. Again, not as big a chart, but it does have signals that can occur it can occur quicker, but also more frequently, which doesn't necessarily help you. In this case, perhaps it was a good potential jumping in point. Want to know more about it? Please make sure to sign up at our website for our daily market review, and with that you'll get our how to read a stock chart video, which cues you into everything we do, how we do it, why we do it. Now let's keep moving through these charts. We're going to the Qs. QQQ down 1.81%, big down day for tech stocks. That is the NASDAQ 100. Remember, we had that crossover on the weekly chart, again a weak crossover back on the 16th of June. And then a sideways slide. What are we showing from the down movement over the course of the day? We have a big T that is called a doji. Means lots of indecision. And again, the candle's not complete. It's just the first 2 days of a 5-day candle. A week candle is, of course, 5 days. Week, W-E-E-K. It is also a weak W-E-A-K candle. But we see derivative oscillator heating up. And, of course, we see the price percent oscillator accelerating away from the red signal line. As we look at the 2-day chart, we can see how the market had started moving up over the last 3 2-day candles, and then the latest 2-day candle rotating over, going down. So we'll continue to watch and see how that develops. If we dig into the 4-hour chart, of course, we did have the requisite pullback that we require and a nice crossover in the afternoon. So look for a jumping in point on the morrow, that is on Wednesday, sometime after 10:30. See if indeed the chart is moving in the right direction for you to jump in now that we have a confirmed crossover with that candle closing, with the crossover going down on the NASDAQ 100. Told you to wait and watch on that. Of course, the 2-hour chart did cross over sooner. That was at the end of the day on Monday, so your jumping in point on the 2-hour chart could have been around noon. But again, problem with the 2-hour chart is it's a smaller chart, smaller positions, and you can have more flux. You can have more false positives. Okay, now let's keep moving through these charts. We're going to go from the Qs to TLT. What do we see going on there? Big downer day on the weekly chart for the 20-year bond fund. It had been going up so nicely for us. Now again, we're not seeing all of that because we had big up moves prior, but the derivative oscillator is continuing to gain energy. The price percent oscillator not going up at the same angle it had been in the prior week. Now let's drill in a little bit. Look at the 2-hour chart. Again, we have crossed through the 2-day chart. We've crossed through our 2-day trend line, still above the weekly trend line. That is of concern. Again, for all of that nice up movement that we had, we see derivative oscillators lost a great deal of strength. And again, the price percent oscillator has really kinked over going down. Let's take a look at that 4-hour chart. We warned you about that looking long in the tooth. We had that last 4-hour candle was a big open box red going down. Of course, we saw that mega movement down in the morning, which of course crossed over on that 4-hour chart. That was your get out signal if you had not gotten out before on TLT with that nice up move that we had and the nice ride that we had, a couple of dollars or so. So again, no reason to be in TLT at this point after that huge down move on the 4-hour candle starting the day off on Tuesday. Okay, we will continue to see again if the 2-day chart continues to stay up and the weekly chart continues to stay up, that is no vertical crossover going down, and the 4-hour chart rotates back over going up, you might have another jumping in point. We shall just wait and see. Lastly, we'll look at gold. Gold was up 0.38%. We did have that crossover on the weekly chart going down on gold. That occurred over the course of the last week, and we shall continue to, forgive me, we've started, yes, drawing that for you to, again, look and see if we're going to have that confirmed, and we'll continue to monitor that. As we look at the 2-day chart, we see that it, of course, had crossed over going down back on the 16th of June. And what we've had happen is a leveling off and a sliding sideways. Again, as we zone in on the 4-hour chart, what do we see? Remember, we talked about how the 4-hour chart had started going up on the 23rd at noon. We saw big up movements, crossover going up, and then the 4-hour chart lost all its energy, dropped back down to the bottom it had made before at around 118.25, and now we're sort of sliding along that. A bit of an up movement for the day, but doesn't mean that it's going to continue going up. However, again, this 4-hour chart is interesting to watch. It tends to be our trading chart for gold because it works time after time after time. Does it work every time? No, not necessarily, but it may recover on this one. I am concerned derivative oscillators losing the energy that it's losing, but the price percent oscillator is trying to push up, particularly with that up movement in the morning. So again, we will continue to watch. This could be a pullback for further down moves with all of that strength in the pattern going down on the 2-day and the weekly chart. So continue to keep an eye on gold. We shall see what we shall see, and we'll continue to watch gold and just, again, see if it recovers and if this 4-hour chart continues to be the chart that tells us what's really happening with gold. Much, much better than any of those other larger charts. It's strange when that happens, but on gold, it's just been that way. Folks, that's where we are as we end the day on Tuesday. Go into Wednesday, the 28th of June. Thank you so much for being with us. You have questions, problems, concerns, want to know more about what we do? it's easy to contact us, cw@chartingwealth.com. cw@chartingwealth.com. Again, make sure you're signed up for our daily market review. Easy to do at chartingwealth.com. Put in your name, first name that is, and your email address, and you will receive our daily market reviews every day the market is open. You'll get our weekly market worksheet, our daily market worksheet, our trader worksheet, in addition to the lat that we use at freestockcharts.com. That charting software that we use is free, and it's a great website, chartingwealth.com. We send you the lat that we use here. Also, you will be privy to the extra trainings that we put out, and we have a new one that we are preparing that will be coming out very soon, and it is a new chart we have designed for Bitcoin, for reading Bitcoin. You will really get a kick out of it. Thanks so much, folks. God bless. Let us hear from you. We're here always for you at chartingwealth.com.